Hey folks, welcome to Friday the 18th of March 2022. And so we have had FOMC out of the way. Happy late St. Patrick's Day to everybody. I was off the desk yesterday, enjoyed a couple of drinks. It was a fantastic day with the family, so I hope everyone enjoyed it too. Um, Coming back in this morning, equities holding high from pretty decent push up over FOMC. Quite a pullback over the initial statements, and then just lifting up quite well over Fed's Powell and his presser. So I think we hit into some really decent downside targets on equities on Monday and Tuesday, and I think we're still holding high from the push from those. Today on the data slate, really the highlight of it all is going to be the existing home sales out of the US for February at 2 p.m. GMT, coming in for 6.1 expectation, prior 6.5 mil. Not much going on. I'd be interested to see the Baker Hughes rig count as well at 5 o'clock, but I'm not going to be trading that event, as I never do. It's not really a tradable event. So look, let's get over onto these charts. We do have quad witching today, so there is going to be quite a bit of moving around, repositioning, all sorts of jiggery pokery going on in these markets. Now, one thing to note is we have rolled to the K contract on crude oil. That is the May contract. I'm also gonna wait to roll my nat gas contract here, as it's volume based rollover. I just got this squawk down in my ears. And so, yeah, all right, let's have a look. NASDAQ here on the daily. So you can see we're going to come right back up into this shelf top area high here from April 2021. Really nice level, 13,876. And so we've kind of hit above that and just now moving into what is kind of an upper level here to look at. Let's just have it on here. So we're kind of sitting around there at the moment. Let's see, let's get the right level on here. Yeah, 14,037s. For me, I think we can push on even further, but not without a bit of a pullback onto the 20 EMA. That's coming in 13,876s, just at the bottom here of this sort of line in the sand that I've been tracking for what seems like a couple of years now. But no, I think it's a couple of months here. But yeah, reversal back into that, and then we can get on up towards the 50 EMA. I don't really see what's out there to bring these markets further down at this time. SPOOs, yeah, I think that basically across the board, I think we need a breather. SPOOs here on the daily, you can see we're holding well high here above this 43, above the retest on the trend down here, well high above there, but 43.60 holding the bottom of the market. That is this sort of high area here from the 14th of July 21. It's a bit of a line in the sand I've been just tracking as well for quite some time. And I think we hold here. You might get a little spill back down again. Sorry, hold on a sec. We'll do this. Might get a spill back down again onto this sort of 20 EMA. We're currently holding the 200 EMA right now. So a little splash back down. Easily on the cards, then find some support 43.23 quarter, and then we can kind of push back on. The price hikes the rate hikes have been priced in. There's quite a few people who should be a bit more sophisticated and know better on Twitter, giving out that why aren't we coming down on the markets? Well, it's been priced in. It's been priced in for quite some time, maybe back, as far as December when we had this sort of signaling in the markets. So, don't be crying over your spilt shorts here. That's all I'm saying. And the Dow, lovely area here that we're just targeting into the high of the 10th of May 21. Confluent almost with the 100 EMA here. So 34,583 target to the upside. 100 EMA, prudent to take something off if you have been long here. 34,476 on the 100 EMA. Apart from that, I mean, I don't really see. I mean, yeah, you could be looking at this level here, 34,445s. But I just don't. We haven't really paid too much respect to that level so much, as we have to this kind of older May 21 level back here. So yeah, look, I like the upside, but we probably may need a pullback of sorts, as I've shown you across the other markets, into these 20 EMAs. I don't know if the Dow is going to get dragged into that level of a pullback. I mean, that's going to be quite the pullback from where we are. That's going to be about 1.5%. So yeah, could be tricky out there, is what I'm saying. Trying to get on some of these, and we do have a bit of a trend here to pay respect to as well. Let's just keep that one on there. So that's equities. Looking at oil on the daily, well, we switched to the K. We've rolled forward to the K22 contract. High of day here is the 104.69s. This was a nice little break point on the way down. So we're back at the scene of the crime this morning. Can't hold a bid there. So we're pulling back. 20 daily EMA below, confident with pivot. You've got sort of $100 there as well. I like a pull back down onto here, see if we can find the buyers, and then yeehaw, let's go for higher prices for the rest of the year. Do I like it? Of course I don't like it. I'm paying through the nose every time I even look at my car right now. Bonds, T-notes. Yeah, I mean, look, I think a little bit of recovery from the rattling they got from Jerome. You can see this sort of downside there from Wednesday from the statement release, and kind of struggle to get back to 124.29 halves. Still struggling to get back up there. But the dollar and the euro trades here are quite interesting. Okay, so if you're kind of monitoring these markets properly, you've got this line in the sand here. I'll show you this on the weekly in a minute. Well, actually, I'll start off with that. Here is the line in the sand, right, on the Dixie, on the weekly bars here, right, back to 2019, August 2019. All right, easy peasy, get a little area, and you can see that we just couldn't hold it there. It was quite prevalent there, even last week. Excess into those highs, couldn't hold it, right? Okay, so that's the thesis that line in the sand area is resistant to trade. Okay, forget about the trend top up here for now, right? Resistance here, right? And then we go to back to the 60-minute, and you can see all that resistance in here. Just can't do it. Over FOMC, what happened? Big scramble push up into that line in the sand. Couldn't hold it. Nice longs in the euro, and the dollar just heads south down to the 97 spot, 74s. Finds support, and we're on the way back up, probably to test around this line and lower line in the sand here. I do think at one point we are going to get with the groove for the bid back on up in the dollar to achieve this area, but you're looking at weekly bars here. That could be a number of months, probably 2 months, before we can put in a risk event to drive us back up here in the Dixie. What's that going to be? Who knows? Nat gas, well, I don't think we have much to talk about on nat gas at the moment. And gold holding really well, high 1933s after a little splashback here onto the 1900s from the FOMC risk event. So, yeah, it was priced in. Cable, I do want to look at cable because as much as I don't really trade cable that much, you can see this 30 spot 30.15s, really big line in the sand for this market, and just took a bid there. And going into the 60 minutes, you can see really took until 6 o'clock Tuesday, night before Fed, to find a buyer there. And then when it came into the Fed announcement, we pulled back. And then remember, the low here was pivot on Wednesday at 6 o'clock. That was pivot on the day. And then yeehaw, back up, target achieved, 31.57. So really nice trading there. We are weak on cable. I think we could come on back down here a bit, but let's see what the dollar wants to do with the finish on this week. But yeah, I think shorts for cable and euro are what I'm looking at today. All right, that's it for me for a spin around the houses. Please do click to like and subscribe, and be notified anytime we go live for events. And listen, have a good day, and I'll talk to you on Monday. Cheers.